The Union Budget for the year 2012-13 has sought to improve the supply side of the economy and announced considerable subsidies to farmers and retailers, while providing some relief to the individual taxpayer by raising income exemption limit to ₹2 lakh. Service tax and excise duty were raised by 2%, further widening the tax net to make it a balanced budget. The budget, however, left the industry without major incentives and common man with a fear of inflation.
The proposed personal income tax slabs are as follows. Income up to ₹2 lakh, nil. Income above 2 lakh and up to 5 lakh, 10%. Income above 5 lakh and up to 10 lakh, 20%. Income above 10 lakh, 30%. These changes will provide substantial relief to the taxpayers.
Along with the rise in income tax limit, the new budget also has concessions for the corporate sector, especially with relation to basic infrastructure, so as to encourage investment in this sector. The concessions focus mainly on power generation, air transport, construction of new roads, manufacturing, fertilizer and construction of dams. While the government seemed to offer some relief in its direct taxes, the indirect taxes saw the service tax rise up from 10 to 12% and duty on gold bars and coins increased to 4%, while branded silver jewellery is fully exempted from excise duty. Goods with increased prices include SUVs, imported cars, television sets, cigarettes and tobacco products. The reduction in direct taxes are estimated to result in a net revenue loss of ₹4,500 crore. The indirect tax changes will fetch a net revenue of ₹45,940 crore, thus multiplying the gains of the government.
Looking at our vast commitments and to maintain a healthy fiscal situation, I propose to raise the service tax rate from 10% to 12%, with consequential changes in the rates for services that have individual tax rates.
While majority of consumer goods become dearer, the new budget reduced considerable taxes on agriculture and mining.
Carrying forward the initiative taken for agriculture and agro-processing, in the previous budget I propose to reduce the basic customs duty from 7.5% to 2.5%. Sugarcane planter, root or tuber crop harvesting machine and rotary tiller and weeder, parts of the manufacture of these, to reduce the basic customs duty from 7.5% to 5% on specified coffee plantation and processing machinery. I propose to reduce the basic customs duty on machinery and instruments for surveying and prospecting from 10% to 7.5% to 2.5%. In addition, full exemption from the basic customs duty is being provided to coal mining projects. To encourage enrichment of the low-grade iron ore, of which we have huge reserves, I propose to reduce the basic customs duty on plant and machinery imported for setting up or substantial expansion of iron ore pellet plants or iron ore beneficiation plants from 7.5% to 2.5%.
Promising to bring out a white paper on black money, the finance minister in his budget also advocated measures to check the flow of unaccounted money in the country's economy.
I propose a series of measures to deter the generation and use of unaccounted money. To this end, I propose introduction of compulsory reporting requirement in case of the assets held abroad, allowing for reopening of the assessment up to 16 years in relation to assets held abroad, tax collection at source on purchase in cash of bullion or jewellery in excess of 2 lakhs, tax deduction at source on transfer of immovable property other than agricultural land above a specified threshold.